Just seeing a quick question here from Stuart, who says that since the onset of the COVID-19 pandemic, he hasn't had a lot of success trading sentiment as he usually did trading something like economic data, and wants to know whether there is a way to better categorize news based on their potential impact. Now, thanks for the question, Stuart. The one thing that I can say, just as a start, is that you're definitely not alone, and not the only trader that's frustrated right now with the choppy price action and the constant changeable moves we're seeing in terms of sentiment. It has been a really tricky environment to navigate from a market point of view. Now, looking at the question, preparation is really the key thing. With all the noise going on in the market on a daily basis, it's more important than ever to make sure that we can cut through the noise and basically prioritize the most important events. And when it comes to economic data specifically, the onset of COVID-19 has to some extent skewed the priority that markets place on economic data. And a good example of this, of course, was that 2 months back, the NFP print coming in at negative 22 million, and not even moving the needle in terms of market reaction. Now, there are essentially four areas that we can look at if we really want to categorize upcoming news events in terms of their potential market impact. The first one, and arguably the most important question to ask, is whether a data point, where it stacks up against the current underlying global macro themes in the market. So, looking at something like a CPI or a GDP event, those data points are always going to be important from a data point of view, but if the market is solely focused on other global macro themes, like last year's trade wars and the Brexit announcement before that, or now COVID, that macro global themes is always going to be the first lens through which we look at these upcoming events. The second area to focus on is whether the central bank is currently focused on that particular event. The third one we can look at is how big a change in expectations. How will a big change really affect the market's expectations for the central bank, for monetary policy going forward? So, even if we do see a big deviation, will it be something that the central bank will be worried about? And if the answer is no, then that's possibly a situation that you can ignore the data and not really expect a lot of movement from. And then finally, basic expectations in terms of the actual events always going to be important. So what is the economic data polls pointing to for that particular event? What is the market's minimum and what is the market's maximum expectations? Now, the challenge with economic data, like we said, during times like we're trading in right now, is that the ranges for expectations are sometimes crazy wide. So it can be quite tricky to establish, when something will be truly a shocker to the market and when the market will just look past it. But that is, again, where the other 3 points come in terms of a hierarchy. It's not about the data itself, but about how it fits into the bigger picture macro theme and into the overall monetary policy as a whole. And this is really where some of the research in the terminal becomes extremely useful. For all of the big upcoming events, we usually post our risk event outlook report. A good example from this week was the RBNZ report. If we just scroll down to Tuesday, we had the risk event outlook report for the RBNZ meeting. So these reports are really gold because it gives you a detailed rundown of exactly what the market is currently looking for, what the possible market focus will be, and possible outcomes from that particular event. Apart from that, we also, of course, in the research section, have the weekly top trading opportunities report. Now, this also sifts through all of the major upcoming events for that particular week and pinpoints a couple of ones that we think the markets will be really focused on that can provide some great trading opportunities. A good example of that from this week, of course, was the big moves we saw in the markets from the PMI numbers. Great trading opportunities coming out of that data in this week's trading session. And then from a more daily perspective, we of course also have the daily risk event outlook report. So in the must read section, just every day look for the daily risk event outlook report, which basically takes a much shorter term view and basically categorizes the upcoming events by providing possible market impact as well as sharing some insights into how certain outcomes can possibly see the market participants react. So a good example from today was, of course, the initial jobless claims, where when we had the mixed data, one better, one worse than expected, not really seeing any potential impact from that potential event. But we did see some slight upside when we had the better than expected durable goods release coming out. And of course, we gave the reason for why that might be the case. So of course, doing your own research, your own analysis to try and categorize the upcoming events by looking at the calendar is obviously something that you can do in your own time, reading through investment bank reports, seeing what they're expecting from the outcomes. From the terminal point of view, the reports that we have is basically there to create a shortcut, to help you to better prepare for these events without going through all of the analysis yourself. But obviously, if you have the time to do it, if you have that preparation time to go through these events individually, that'll of course in the end pay off for you in terms of being prepared for these types of events. So that's a couple of things that you can do to look at to try and better categorize these events. And of course, if you have the time to do it yourself, by all means do that. But most of the reports that's in the terminal has enough research there available for you to be able to better prepare and categorize the upcoming major events.